Today we're going to talk about SBA loans and how entrepreneurs can fund business acquisitions without quitting their job. Hey, Beau, how's it going?
Going well.
All right, let's just dive in. Can someone keep their W-2 job and still get approved for an SBA 7A loan?
Yeah, we see it all the time. So a lot of times on a business acquisition, you're also buying the people that run the business. It could be semi-absentee to begin with. So you're gonna keep the manager on, you're gonna keep the staff, the crucial staff. So in theory, yes, that happens quite often. Now, anytime you take a business over, there's going to be a learning curve, and you're going to have to be hands-on. But we do see people keeping W-2 jobs and owning businesses is quite possible.
What makes a business model, quote unquote, semi-absentee and bankable?
Well, if it cash flows, it cash flows. And so if it's got infrastructure in place and you meet all the other requirements of being a borrower, an eligible borrower, it doesn't matter if it's owner operator or or more semi-absentee. It actually sometimes makes it stronger if they already have somebody that's been running the company for 20 years and they're staying on board. So it doesn't really matter. It's just a cash flow perspective from a lending perspective.
For first-time buyers, what kind of businesses are best?
I don't know. It's going to depend on the buyer. Everybody's got their unique abilities. Some people have a lot better skill sets on managing and leading teams and financial wherewithal. So I think it's really going to depend because everybody's so different with their skill sets. So I would say somebody who's already been leading and managing and maybe a CFO of a corporation would probably have better skills from an operation standpoint, but some people are really good on paper. Like, hey, they check all the boxes that you think this person could run a business, but they're missing one part, which is they can't communicate with their workers, right? Their workers might be blue collar and they never really know how to interact with normal people, right? They're used to the stuffy corporate people. So I think it really depends, but I think all in all, you got to have the roll up your sleeves kind of mentality, because even if it's a semi-absentee business, when you're making a transition, that's where all the work happens before you can be semi-absentee again. And I think that's where people get fooled thinking, oh, well, it's a manager in place. Well, you think it's just going to run perfectly? Probably not. So I think you really got to be hands-on in the beginning, no matter what.
All right, let's talk projections. What are the key things that lenders look for when it comes to projections?
Realistic projections, they're usually going to stress test. So if we're talking about a startup, they usually want to see cash flow by year 2. They're going to usually give your year 2 projections a haircut and stress test the interest rate to make sure, even stress testing it, that your projections are accurate. Projections a lot of times on startups are they're pretty hard, especially if it's non-franchise. If it's a franchise, we can look and we can see the 50 other franchise owners and what they've done. And I actually talked to a bank last week, Bill, and they don't even, on franchise startups, they don't even ask the borrower for projections because they're like, we're just going to go off the FDD item 19 and we're going to do our own, we're going to create our own projections. Because what he said was, these guys don't know really. I mean, they're making their assumptions. But we're just going to go off of an FDD and look at and we're going to use an average number. And then they have to check the box for all the other attributes of a good borrower, which kind of makes sense because a lot of these people that I'm talking to have no idea about projections. They just fill out the paperwork. But I always still say this, that we need to do a projection so you understand the business to a higher level, as opposed to like, oh, well, I'm going to own this vending business. I'm going to get 10 machines. It's going to do this many. No, you got to understand what are your expenses, liability insurance, what does it actually take to ramp up? You're not going to get all 10 machines month 1. It might be 2 machines month 2. It's going to be staggered because they still have to find the location to place these machines. So understanding your cash flow, especially in the beginning, is crucial, because what if you need working capital? So that's why we put in working capital in these loans, because you're paying that $2,000 a month payment for 6 months and you still don't have cash flow. And most people are like, oh, well, I didn't really think about that. That's why we do projections.
Cool. Last question for this segment. How should a buyer prepare before approaching lenders or brokers?
Go to my YouTube channel, watch a bunch of videos. I think that'll give you a baseline. Google Form 413. That's a financial statement for SBA. Fill it out. Don't date it. Have everything ready. Have your 3 years of your tax returns, a resume ready, and then really understand whatever types of business or whatever type of loan requests. If you're doing a business acquisition, understand your buy box. Get the financials from the business right away, because that's really what we need to say, hey, is this a viable business at this price or not from a cash flow perspective? But that's what I would say is resume, all your forms that you need available and ready, so you're not scrambling. Have 3 years of tax returns, a current W-2, a resume. It doesn't have to be like a work resume, but just about you, what your skill sets are, what you've done in your career over the last 10, 20 years, anything that's relevant from a business perspective. But that's really what you need. It's not too hard.
Are you ready? It's time to get the tools, prompts, and guidance you need to scale your business. With my team of VAs, my calendar stays full with qualified appointments. Now I want to help you do the same. Hi, I'm Beau Eckstein, and I've put together an exclusive ebook that will help you supercharge your productivity, scale your operation, and close more deals using virtual assistants and AI. Here are the key points you'll discover: productivity boost, scalable systems, and how to close more deals. In this free ebook, you'll discover proven strategies I've used in my own business, strategies that have helped me go from doing it all myself to building a high-performing team that runs like a machine. Get your free copy now and unlock the secrets to growing your business faster than ever before. Please visit bizscalingplaybook.com.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.